Hello, Dr. Faiz. My name is Dimon Jun. My team number is 261854. I am from the group 5 and today I would like to present our group assignment topic that is the ethics of accounting practice. First, let us explain about the executive summary. In this part, Enron scandal is the famous of accounting scandal in the United States. This scandal finally led to the bankruptcy of Enron Corporation, which ranked 7th among the top 500 companies in the United States. Finally, Enron became the second biggest bankruptcy case and also the biggest audit failure case in the United States for the Archer Andersen. The accountancy firm Archer Andersen was discharged due to the Enron scandal. Besides, the overseas member of Archer Andersen has switched to other firms. The investor and the shareholder of Enron will suffer the huge loss. Finally, the Enron is a synonym for the corporate fraud and degeneration in the eyes of the world. Next, I will explain about the case summary. First, the Jim Chalmers is disclosed his expressed doubt about the Enron profit model, as many of the profit reflected in the Enron report was inflated. Enron always through the dazzling series of financial related transactions to make the company, since it gained huge profit and left unprofitable part out of the balance sheet. Next, before the scandal, the business growth of Enron always grew at double speed, resulting in the investor to feel excited about the Enron business. However, while Enron released the financial report for the second quarter of 2001, it was announced that the company loss were $618 million. The situation led to the United States Security and Exchange Commission start to investigate the Enron. The Merrill Lynch and Standard & Poor's also begin to downgrade the Enron rating. The pressure of the investor and the shareholder finally made the Enron forced to admit that they were making accounting fraud. They admit making accounting fraudulent report nearly $600 million in the profit. In order to maintain the position as the world leading company, Enron has expanded its business, but it also facing the huge failure in the operation and a huge loss was incurred in their business. Next, as an auditor of Enron, Archer Andersen neither detected the company's inflated profit and its huge debt. On 10 January 2002, Archer Andersen admitted that has destroyed the file related to the Enron audit. The scandal finally resulted in the Archer Andersen to face the dissolution of his firm. Besides, the collapse of Enron has made the investor lose billions of dollars. Finally, Ken Lay and Jeffrey Skilling was indicted. The former financial director, Andrew Fastow, pled guilty and sentenced to 10 years in prison.
Good evening to Dr. Faiz and my friends. My name is Wong Kaman and my matrix number is 262305. I will continue to explain about the ethical awareness in the case of Enron scandal. So, what are the ethical issues that have been discussed in this case? First, unethical accounting practice. Enron had cooked the books by making their earnings to seem much higher than they actually were. The meaning of cook the books is the intentional distortion or the hiding of actual and accurate financial condition or performance of the business. It implies the fraudulent activities that the corporation done, which include the falsification of a financial document. In order to cook the books, Enron employed an accounting method known as mark-to-market accounting. This method enabled Enron to count projected earnings from the long-term energy contracts as current income. This money might not even be collected for a few years. As it was difficult to estimate the viability of those long-term energy contracts and their related costs, it is thought that this technique was used by Enron to inflate revenue numbers by manipulating projections for future revenue. Eventually, it caused the investors to expose to false or misleading reports and they lost their money. Second, we will talk about the financial statement fraud. Examples of this type of fraud are the concealment of financial losses, misstate revenues or expenses, misused assets, and so on. Off-balance sheet financing is a strategy that keeps huge capital expenditure off the balance sheet of the company so as to lower down the debt to equity and leverage ratios. When a huge capital expenditure would affect negative debt agreements, this form of balancing is definitely considered. A special purpose entity is a legally separate business that absorbs risks for a corporation. It does not have to record in the accounting records of founding corporation as long as certain accounting criteria are met. This arrangement allows a corporation to shift unrelated activities and risks away from its financial statements. Therefore, Enron used special purpose entity SPES, which are a type of off-balance sheet financing for the purpose of hiding huge debt loads because of the capital investment for expansion to other business areas. Enron used its cash and notes arising from SPES for trading its rapidly increasing stock. This was aimed to hedge assets to recorded on the balance sheet of Enron. And with the reduction in the company's stock, the worth of SPES also decreased, and Enron was held liable for doing in their favor. The company went bankrupt and it was beyond Enron's reach to pay back its investors and creditors. Although the company mentioned about SPES in the notes of financial statements, most of the investors were not able to catch the intensity of the situation. Furthermore, over hundreds of SPES were used by Enron while conducting its business, but it abused the practice by utilizing SPES as dump sites for its troubled assets that were falling in value. The losses of Enron would be kept off their books by transferring these assets to SPES, and it finally resulted in the financial condition of the company to seem less severe than its actual condition. This unethical behavior made it difficult to see how Enron was really making money, and it caused the investors and even employees to suffer when its stock began to decline. That's all from me, and thank you.
Greetings to Dr. Faris. My name is Cha Chen Fen, metric number 262349. The part I'm going to present is the awareness of stakeholder. First, a stakeholder is a person or party who has interest in company. They can be the one who are affecting the business or the one who are being affected by the business at the same time. Investors, suppliers, and employees are the primary stakeholder in a company. However, nowadays, government and communities, who means by public, also involved in stakeholder due to the rising focusing on corporate social responsibility. In the case we investigated, the first involved stakeholder are Andrew Fastow and his team. For information, Andrew Fastow was Chief Financial Officer of Enron Company. He used special purpose entities to hide billions of debts of company and also other unethical assets. Due to his greed and more, he transferred some stock to off-balance sheet to exchange for cash and not. Enron's real performance had been hidden from investors, government, and creditors. This action not only inflated Enron's share price at that time, but also hiding realities from other stakeholders. His action is undoubtedly unethical and illegal. He did not fulfill his job duty to earn the best interest in company in ethical manner. He also admitted his behavior was unethical and illegal on 2006. The next related stakeholder are Kenneth Leley and Jeffrey Keith Skilling. Kenneth Leley was the founder, chairman, and Chief Executive Officer of Enron Company, while Jeffrey Keith Skilling was the Chief Executive Officer of Enron for a short period of time. Kenneth Lilly approved all the unethical practices made by Andrew Fastow and Jeffrey Keith Skilling without inquiring any details. As the main decider of the company, he should know about all the details about the company and make the decision based on an ethical behavior. While for Jeffrey Keith Skilling, he constantly focused on how to hide the debt, how to meet the Wall Street expectation by using the method of mark-to-market accounting, which was first accounting based on market value and then inflated the value. His unethical behavior also included giving pressure to Enron executives to find new routes to hide Enron debt by unethical way. As a leader of Enron Company, they should seek ways to solve the debt but not hiding the debt by unethical accounting practices. The third stakeholder involved is external, which is Arthur Andersen LPP. The firm had approved accounting measurement issues which obviously violated with ethical accounting principles. It had helped to sign off Enron problematical corporate reports for many years. If the firm fulfilled their duty to check and sign Enron financial statements accurately and in an ethical way, Enron scandal should be prevented. The firm should report the unethical accounting practices but not help Enron Company to cover it. Last but not least, public investors and employees also acknowledged as parties of the very important stakeholder for the issues. Enron's scandal resulted in short-term financial gain, but long-term damage, including Enron's employee job losing and lost their retirement saving in the company. Besides, investors which are shareholders also lost their money as investment loss. For investors, they are looking for the projects that are worth their money invested. However, the unethical accounting practices made by Enron have failed all the investors. Public also been affected because the economy felt the collapse shock because Enron was a massive enterprise. Through the lesson of Enron scandal, every organization should be obedient to every ethical values.
Good day, Dr. Faiz. I am Angeline Lissing, metric number 261940. I will talk about ethical reasoning. Ethical reasoning is a reasoning process through which it can be judged whether human behavior, institution, or policy may violate moral standard. Ethical reasoning includes the moral standard we use to evaluating information about the content being evaluated and moral judgment about the content being evaluated. From the ethical reasoning, we can know the different views of stakeholders were judged to meet or violate ethical standards. In the case of Enron scandal, we also know about who is the stakeholder has the strongest ethical adjustment. Firstly, Enron CEO Kenneth Lay is the founder. He is a dishonest person who lack of integrity. He knew about the risky financial condition of Enron in 2001. However, he used ethical egoism and still deceived employees and investors by urging them to invest further in Enron stock, even though the company's future growth was uncertain. In the end, Kenneth Lay destroyed the company that he has established. The second stakeholder is CEO. Jeffrey Skilling told the executive that they can hide billions of dollars from failed transactions and projects by using the accounting loopholes. This was for special purpose entities and bad financial reporting that. From the above, Jeffrey Skilling was thinking about accounting loopholes were the best way to hide billions of dollars from failed transactions. Besides, the next stakeholder, Andrew Fastow, Chief Financial Officer, he used the unethical view by cheating Enron board of directors and audit committee practice in Harris Accounting. He also pressured his audit and accounting company to ignore this issue. Furthermore, Jeffrey Skilling and Andrew Festool also chants Enron corporate culture and business strategy together. They believe that when stock grows and shareholders become wealthy, it enables Enron to seem very innovative and profitable. However, their action did not induce the board of directors and the investment community to raise serious questions about the executive. Jeffrey Skilling and Andrew Festool were the people having moral egoism, which meant that they could take action to create a greater benefit for themselves. Furthermore, the next stakeholder is in the national accounting firm of Atos and Dyson. Enron had the wrong financial situation, but Atos and Dyson never disclosed because he needed to avoid losing the big customer. Hence, he helped Enron to cheat on its financial statement. Moreover, this behavior was not just only unethical but also illegal. In terms of ethics, Atos and Dyson should stop this kind of fraud as soon as possible. Instead, Atos and Dyson choose to act illegally to make a profit. The last stakeholder is Vice President of Corporate Development, Sharon Watkins. Sharon Watkins has a good ethical view that giving warning to Enron Chief Executive Officer about accounting irregularity in its financial report. She reported the frauds to the government authority. Her main purpose was to promote the best interests of others, and he had behaved in ethical ways. Hence, he gave up her own interest and paid close attention to the interests of others. As a result, the stakeholder which have the stronger ethical argument is Vice President of Corporate Development, Sharon Watkins. Her behavior is an ethical modern. She has good ethical behavior and different with the unethical behavior which done by Kenneth Lay, Jeffrey Skilling, and Andrew Festool, Arthur Edison, and other people which never disclose it and doing immoral things for their own benefit and without concession. Sharon Watkins is only one of these people who choose to oppose the truth.
My name is Wing Ung, matrix number 261892. So now I will proceed with the ethical suggestion. So ethical suggestions can be defined as how the company to develop their solution and also adjustment to solve the ethical issues and also the dilemmas and to perform their best performance for the organizations. One of the solutions can be proceed to solve the ethical problems and ethical issues in the accounting practice is to ensure the leaders exhibit the proper behavior. As a leader, behavior should be performed very effectively and efficiently in overall organizations because it is crucial to act virtuously and also to become a professional person in the organizations. So, for example, the Kenny Law approved the actions of Skilling and also the Festool to forget the fact financial statement. This become the very serious issue. So they want to mispresent the earning also to indicate the good performance in organizations. So the suggestions about the leader is very important to control and to implement the good performance as the employee not forget the fact information about the financials. So this is the suggestion for number one. The second suggestion is to authorize the employee management behavior and also discipline action. As an employee, they should recognize and implement and also learn the accounting behavior through the training, and also they provide their experience in the workplace to complete with the ethic standard when they are faced in the disciplinary action. Even though the employee should follow the instruction from the leader, but they're also able to set up their own tasks and also responsible to manage the financial flow in the organization. So Enron scandal will occur because of the employee is not responsible to control the financial statement in the Enron company. So the one, for example, we know that the Enron internal staff, which is explore the Andrew Fastow private question to embezzle the money in company. So this is the big case, and also the big issues from the employees' behavior. So the lack of the management behavior can occurs the loopholes and also the selfishness among the employees. So for the suggestions is to ensure the employee behaviors so efficiency and also prevent their selfishness, and also to perform very good performance through the training and also gain the experience in the workplace. In addition, the third ethical issues can be solved by improving the confidentiality of the accounting practice. As we know, the inventor and also the clients are the major important roles in the financial system. So they also trust on the accountants to provide their private informations for them, and also to invest their property in that. So if the employees or also the accountants are not responsibility, so this will make their information will be cheating by others, and also to lose their own property properly. A serious issue that occurs in the Enron company, which is the lack of the confidentiality, and also the employees violate the financial regulations to embezzle the company funds into the private account. So for these reasons, if the employees want to become professional and also work effective, they should mandate the training seminars to develop their accounting practice, and also to evaluate their management financial representative to prevent the mistake occurs in the financial statement. The last ethical suggestion can be proceed to avoid the ethical scandal due to the changes in the management initiative and also the culture of the organizations. So leader cannot reject about the change of transforming culture and also reconstruction in the organizations. This is because the leader set their goals to implement the targets and to encourage all the employees to provide the ethical values, and also to support to determine the right or wrong in the accounting rules. So at that times, Enron should reformulate all the organization strategies based on the management plans, and also to oppose the keenly-based behavior in the accounting financial statement. So this is necessary for leaders to understand about the consequence of taking actions to improve the confidence and also identify the accounting behavior.
The conclusion for our group assignment is Enron has made the front accounting to make the business well-being. Besides, the awareness of Enron executive let the stakeholder involve the unethical activity such as front accounting. For example, Andrew Fastow, as the former chief financial officer, used special purpose entitled to hide large amount of debt and ethical asset from other stakeholders. The next part is the ethical argument. In this case is the Enron executive sold their company's stock before the bankruptcy of Enron. However, the low level of employees were prohibited from selling their stock because of the 401k restriction. Besides, Enron scandal also brings some ethical problems such as unethical accounting practice, improper transaction, and so on. The organization should determine the accounting practice and provide the appropriate management to ensure the leader exhibit the proper behavior. Okay, what is the ethical lesson in this Enron scandal? First, the organization should have the incentive and constraint to prevent the abuse of authority of senior executives in the organization. It can ensure the management always free from the management front, and it can ensure the leader is fully responsible to the company and having the ability to improve the quality of entrepreneur and review the corporate value. Besides, the accounting institute should focus the strength, the responsibility to carry out their duty and should always improve the integrity system. This can effectively show the professional attitude and carry out the accounting review and also maintain the reputation of the organization. That's all for our good presentation. Thank you.